Let me see if that's actually working. And that looks okay. That looks okay. But I can't get into YouTube. Gotta love that. Okay, there is some chance we are now live on YouTube, but I can't monitor it. So I will just say g'day, everybody, and hope that that is indeed the case.
I'll have a look.
Rightio. Can you see it, mate?
I will have a look. I will have a look right now. Let me see.
Well, the dollar is absolutely tumbling as I look at the charts here. Certainly against the Aussie, certainly against the Kiwi, in particular against the CAD, crashing against the Singapore dollar. Oh, don't tell me we've missed that. That's a shame. That's a terrible shame. How about the yen? The yen. Where's the yen? There. Interesting. It's holding its own against the yen. All right. Welcome, guys. You should be in the show by now. And it's a very, very good first day of the week, I'll call it, because yesterday was just a non-event as far as I'm concerned. I think the indices might have moved just a fraction, but there's no currencies that I was looking at that did any movement at all. In fact, I closed my charts as soon as we finished the US session. I went to bed as I normally do. And when I woke up this morning, nothing seemed to have moved, so I'm okay with that. How about you, Ash? What happened? Ash lost his microphone. That's what happened. I think he's listening to something.
Oh, sorry, Mitch. Do you know what I was doing? I was just listening to see whether we're online. Can you share your screen? I'm not sure whether we are on or not. I don't know if we're live or not. I've got a version. Oh, Crystal's there. In fact, good morning, Crystal. Could you tell me whether this is the right? Are we live, Crystal? Because I can't tell whether this is. I'm watching a recording here. And I was hearing you talk twice, which is why I heard you say, I think his mic's muted, but I thought maybe that was on the recording. Hi, Ash. Hi, Jeff. Was late in yesterday. Oh, hey, Helen. Custard's in. Okay. Oh, are you sharing the
pound?
This is 1 point. The pound. Yes. Okay, fine. Yeah. We are live. All right. Fantastic. All right. Good morning, everyone. Emmanuel, how you doing, buddy? We can talk about your Aussie trade. Hopefully, you're still in that, but we'll talk about your Aussie trade later on.
Yeah, well, as I said, looks like the dollar's crashing around us. What's happening in Industry land, mate? Before we go.
Oh, in Industry land. Well, we've got to try and buy up, basically. We've got to try and get on board with it, but it's not going to be straight away. So if there is a trade straight away, then everybody prepare for something like probably a 60 pip stop loss, but be prepared for it to be 30. So work out your lot size for a 60 pip loss stop loss, and then halve it if we need to get in at 30. But I would do the pound trade to start with, mate. The problem is it's not. It's not that we're not trying to get the long, but price is a bit high here, so it's got to come back fairly significantly for us to get involved. It might be that we don't get a chance to get involved with this one. It might just explode up, but it's not a good place to get in long. So I will be waiting and seeing if it can come back just a little bit. I don't think it will, which might lead us in a bit earlier than I'd like. So we'll see what happens with it, but. We're looking for the long in the UK 100s, and it's just going to be a case of what kind of price can we get, what kind of value can we get out of this.
Okay, the high of the last hourly bar, which is a big fella, is 1.2257, let's call it, and that makes our entry on the long 1.2272. 1.2272. And the stop loss will be, here's the range of the last three bars. This is the low of that. And the low is at 1.22122. Lots of twos today. And we'll call that 1.2212. And we'll take 10 pips off that, and the stop loss will be at 1.2202. Anybody who is a cricket fan would recognise, probably no cricket fans in the room, I wouldn't think, but would recognise the pause that I'm putting into the twos, as a former commentator used to do very, very clearly and famously, one must say. All right, so what we've got to do now is reverse that. And I've done it the wrong way again, haven't I? I'm a dope. What I need to do is put the order up on the screen first, then put it on the chart. Because I can never remember it, can I? The sell order will be at 1.2202. That part I do remember. And the stop loss on the sell order will be at 1.22. Was it 62 or 72? 72. It was 72. 1.2272. That's what my memory recalls anyway. Let's see if it was right. Okay, so the high of that bar, 1.2256, became 57 and makes that 0.72. All good. So for those, I'll type it up. Those of you who want that, do you need to go to your quick, mate?
Do you know what? The market is coming back pretty swiftly right now, so we might have a chance here.
All right, well, come back to you and I'll type this up and we'll catch up with it a bit later.
Okay, if you give me the screen, mate.
On the way.
Okay. It's still saying that you're most disabled participant sharing screen.
Oh, that again. Okay. So it's one more step. There you go.
Thank you, buddy. Right, now I've got to make sure I get the right screen here. Oh, the screen 2 here. I've got a new toy. Right, so we are looking to go long the FTSE, and I am literally just waiting to see whether and I'm going to have to. I'm just waiting to see whether it. So your price on the long is going to be potentially down here if we can get it. So somewhere at about 60.85. But let's see what happens at this this trend line here. 60.90. It might have to be at 60.90. And we'll have a 60 pip stop loss effectively, because if it comes through this level, then we're going to need to get out, because it might well come down to close the gap. So 60.90 will be the entry. So along here. There we go. There's the entry there, 60.90. And a 60 pip stop loss. I will type this up in a moment, but I'm going to have to get into this trade myself. So I will have to do this. But there's your entry. Now we might be able to do it actually. Let me just see. So we got entry 60.90. Stop loss is going to be. Let's call it just 60 pips for now, and we will deal with the fallout in a second. Okay. I'll probably increase that number there. Okay, let me just make sure that number's right. Yeah, about 15 pips, maybe might be 6,100 actually, but I'll tell you if I get in a little bit earlier, I will tell you. I'm just double checking stuff here, so. I'm going to need to focus a little bit here. So just bear with me while I get this on. Yeah, definitely want to go long here. So just a little bit more to the downside would be great, and we can get in. Now it might be, ooh. I don't want to miss it. You know, I really don't want to miss it, but by the same token, I don't want to get caught in a price which is kind of in no man's land here. That's my slight issue. At least, you know, I'm not if I'm truthful, I'm not absolutely in love with the 60.90 either, but you know, because I'd like the gap closed really, but I don't think I'm going to have too many options if I'm going to try and get into this trade. So just a bit more of a dip to the downside here, and I will be going in. He's dipped a long way back. I mean, we're already kind of 60 pips down as we open up here, but it doesn't look to me like we're going to be closing the gap by the looks of that. Let me just double check something out. Here we go. Just along there. Yeah, it doesn't look like we're going to be closing the gap this morning. We might do, though, which is why the 60-90 is quite important, you know, even though this might be as far as we've come down. We're starting to find just a little bit of support here. But it's just not quite there yet. So let me just do one thing here. Make sure we got some levels in there. Yeah, still a little bit of a way for me, mate. I can't quite justify it. Let me just find out. Let's have a look and see what might give us an opportunity today. I mean, it's coming pretty good. So I don't know whether we're going to get our price, but there's nothing in the way, is there? You know, when we kind of look at what we've got today. Just looking at the potential numbers for the day, I don't see a whole bunch which is going to stop or which is going to allow it to come back if we do miss it, which is going to be one of those unfortunate factors. But ECB finance stability, there's nothing that I can see here that is telegraphed for us to be concerned with, and obviously we could get some sort of weird announcement. It doesn't look like there's much all week, mate. I mean, I've got Fed Chair Powell. Yeah, we'll come to these numbers a bit more later, but apart from Fed Chair Powell, I don't see too much there that would put me off. But I am just not able to get my price at the minute. So I've got to wait. Okay, so sorry, mate. I thought just the way that, you know, when this market opened up, it was moving at such a pace, and it's still a little bit volatile here.
It was on the currencies as well.
Yeah. It just started to really move at a pace here. Like you can see on this 15-minute chart, or even maybe more evident on the 5. Look, bang, straight down. So I thought maybe it would give us an opportunity nice and early, but it's just halted its descent right now. But this is the area just down here. So 60.90 is the price with a 60 pip stop loss. Not sure why that's come up like that. Let's do that for you guys so you can see. The actual stop loss is going to be 30 pips, by the way. So if it comes down 30 pips, I'm going to be getting out. If it comes down potentially 20, I'm going to be getting out. But just to give us some room down here, that's the idea. There may well be a way to get back in again later on. But it's not there yet. So all I can look for is for the trend to continue lower. Still 30 pips away, mate. It's just it's a bit pricey, you know, right now. I can't quite justify it, even though a fly to the upside would be a little 2-to-1. I can't quite justify it just yet. So we can probably move around and maybe come back to this. So I think we know what we're doing. I'll explain why later on, but I think we know what we're doing. I'll go through some of the bits and pieces, because at the minute it's kind of like it's flipping around. And every time it's coming down a little bit, I'm thinking, right, we're ready to go. But then it's just holding where it is. So I don't currently have what I need, and I don't really want to get involved. Now, the only other thing here is that it's possible that we actually get a proper entry, because what I thought may happen, and I would have been all right with happening. Now let me see if my new thing works here. What I thought may end up happening is that we may. I thought maybe we would have come down really right from the gun straight away down. And then we could have just maybe on a 5-minute period and then straight away started to fly up. So we wouldn't have needed any kind of turnaround in this area. But now, just the way it is, it might well be, whoops, what's going on there? Oh, now that's not good. That's not so good. Okay, hold on a second here.
Have you read the instructions?
Do you know what? When you flip this pen over, it becomes a rubber or an eraser, depends on how you say it. But it doesn't with zoom, which is not so good. So I can't. It's still a pen when I'm flipping it over with zoom, so that's not so good. Okay, live and learn. So now what I might be waiting for is a genuine sort of like if we were looking on a 15-minute time period here, then I might well be waiting for a genuine bar now to come down here and turn around. Oops. A bar to come around and turn around here and show me a hold, because now really, it depends on what happens in the next 3 minutes. Because in a way, I was kind of looking for this what we've got going on to happen, but to at least touch this area first and then fly up and give us something that, well, would have effectively done that and all the way down and then bang all the way back up again and ended up in its upper levels and in its upper half. And then we could have just taken the trade. Then we would have looked to take the trade down here on price action that was just flying around. But now the price action isn't flying around. Then it might actually be a little bit calmer than I expected. And this is the thing about the market; it never does what you think it's going to do. So you've got to be so kind of on your metal and just be ready to react into whatever it is actually going to give you on the day. In fact, it's not right to say it never does what it expects you to do. Sometimes it does, but oftentimes there's a slight nuance, and really now we've got a nuance. So as this sort of like starts to move, I'll probably be now looking for the market to come down somewhat, maybe close down there. That might give me an entry, but if it starts to go a little bit below, then I'm looking for some sort of turnaround to get back above this trend line. So I might well have more time than I thought, mate. I thought it was going to be a bit manic, but actually it's not as manic as I thought it would be as yet. Even though in saying that, coming down 60 pips in a 15-minute period is a that's a 1% decline in 15 minutes for the market. Now that's pretty impressive. And of course, it's not a 1% decline overall because we've gapped up, but a 1% retracement, let's call it, in the first 15 minutes is pretty impressive. So it may well be that we still get some pretty fast movement today, or just before that trade is set. But I think my issue is and always has been this gap down here, because with this gap in place, then it means that even though we're looking somewhere around about here to enter a trade, I mean this 60.90 is just above that, but even though we're looking somewhere around this little point here to enter a trade, somewhere in this area between these two areas here, it might come all the way down there, and then start to turn around. And in some respects, that might even negate the quality of the trade, because if it does come down there, we might well then be looking for something that does. And this is the thing about the market. Anything above this level here is really very bullish. Anything below that level becomes either, because it could come down, flip up, test the level, and then come down. So we might have different questions to answer if the market doesn't give us something in this upper circle up here. So going to be waiting a little while, mate. Just seeing how this establishes itself. So nothing as yet. I thought we were on, but we are not.
Right, mate. There's something happening though. I've got no doubt about that. As everyone in the chat box is telling us, the pound pairs are racing up and want to know why. I've got no reason other than everybody's now back at work, guys. They had a holiday yesterday, and they've got an opinion, obviously, and that opinion is not necessarily that the pound is so great, but I definitely see the dollar coming off. So it's not just the pound, but yes, the pound is rallying. Got a reason, Ash?
Well, the statement you made is actually a lot more. Has a lot more truth to it than you probably realise. But we are going back to work by the 15th of June, and I think we might be one of the first countries to come into that particular space. You know, Boris Johnson's very, very keen to kind of get everybody back and rolling, and particularly today, because over the weekend his top aide Dominic Cummings, who is his chief strategist, if you like, he's the man that masterminded Brexit. What's that? Sorry.
Yes, he's in trouble. He's a bad boy.
He's in trouble with the public, but not with Boris Johnson. And this is the thing. Boris Johnson cannot afford to lose Dominic Cummings, because Dominic Cummings, there are whispers that basically he does run Downing Street, and I think that there's probably some truth in it. He's a very, very clever guy, and he has basically been there while Boris Johnson has had all his victories, all his major victories. The huge majority he got in the general election, Brexit, as I say. And he's going to want him there for the Brexit negotiations down the line. So he is not keen to get rid of Dominic Cummings. And the best way to obviously take the focus off Dominic Cummings and what Boris Johnson probably should do is by announcing something else, which is a big headline. And that big headline is that we are effectively going back to work in the middle of June in the next couple of weeks. So that is probably
a headline.
Is it responsible? I am not really, mate. No, I mean, I find it very difficult. As we were discussing yesterday, I find the argument very difficult because without the full evidence, and the full evidence for me isn't about the economy. It's not about how's the economy doing. We know that the economy is going to suffer. What I want to know, what I would want to know, is how is people's general mental health, and health during this period, because I think the only way you could make a balanced argument for stopping lockdown is by saying, yes, we are putting ourselves at risk by easing restrictions, but we are also putting ourselves at long-term risk as potentially people lose their jobs and then go through some genuine sort of mental and physical hardship, because they don't have money coming in, they don't feel worth, they don't have time, or so I think that's horrible. The only way that it's the only way that you could make the genuine balanced argument. How's people's well-being, not how's the economy doing. It's going to be, because really, when it comes down to it, if there was a balance between the economy being the weakest economy in the globe, and yet the people were healthy and happy, you take it. You're like, so what? Because what's it all about, really? It's not about the economy. It's about people, and it's about how people feel and how people, how happy people are. That's what the answer is, isn't it? It's not how much money you earn.
That's what it should be.
Yeah, so that would be the only argument that I could probably hear that would make me think actually he probably is doing the right thing. And I don't have those numbers, and I suspect there probably is quite a lot of people suffering. There are quite a lot of people suffering with this period, and they probably do actually need to get back to normality. Just I think of the single mum with 4 kids in a flat.
Horrible.
I can't see how they would cope, or they'd be coping. It must be very, very difficult. So yeah, I see the argument, mate. I see the argument for lifting it.
You're going to see murders and suicides. Those rates are going to go up exponentially if they don't. I get it too.
Yes. Yeah. Just on some of these questions. So Lewis, gap to close, I doubt it. I doubt that gap is going to close. I think the market is strong enough to keep motoring forward today. And as I say, we may well have missed the opportunity as it dipped back there, but I can't justify that price. So I am not in. 61 is a previous high. Perfect. See, there you go. 6100 is the previous high. So that's around about where we should be looking to get in. Now let me just double check that 6100 and see if that was where we came to. Not quite. So if that's the previous high, now the other thing is this little level here, which may not be the absolute right level. Alan, you're in long. I think you've done okay there, buddy. I think you've done okay. Yeah, you see, that could be the trend line we're looking at right there. So I think Alan you may well be the only one to catch it. Now I have to say I just can't justify getting in here. But in saying that, do I think that you've got a decent trade on? Don't like the price, but yes, I do. I think you may well be the only one to catch it. If anybody else is in as well, then obviously you. Oh, you just joined. Sorry. Oh, okay. Asking. Yes, we want to go long. Yeah, we want to go long. And if anybody's in, they may be the only one to catch it. As I say, I can't quite justify it at this price. But it's already kind of showing that that it's primed. And as I say, the gap likely to close. I don't think it is likely to close. I think we're much more like, because there's two ways you treat a gap. You gap and go, or you gap and fill. And are we likely to get a gap and fill in a strong scenario? And that's all it comes down to. Is sentiment bullish? Then if it is, then we say it's probably going to be a gap and go. Is it bearish? Then we're likely to get a gap and fill. And the sentiment to me looks pretty hot for some upside and maybe some significant upside. Well, you know what? If you're keen to get in Shukri, the thing with it is that if you go in light enough, then you can actually play this market, and that could be an option. How big's the gap? 60 pips. I mean, I'm not going to do it, but if you go in light enough, you can play it. And this is always the thing with the market. None of us want to miss a move, and it could be a potentially amazing move. We looked at the in the US show, we were looking at the longer term timeframes yesterday, and we established that this market could go 700 pips or 600 pips or whatever. So it'd be great to be on board somewhere along here. But then you get the other side of the coin. Just when you think that there's no opportunity that is going to make itself available to you, the market comes back, gives you the best setup that you've seen in weeks, and you start to get pretty annoyed at yourself that you just didn't wait for that particular moment. And it's happened to me a couple of times actually in the last couple of weeks, and I've been fortunate enough to get on the right side of the trade, so it didn't matter so much. But it is it's always a difficult juggling act, where you get in. Because if the overall picture is upside, of course we need to be just getting in on the long side. And I've got a little bit of a rule which I can bend when it comes down to setups. If I've got a strong, if there are other strong things in the frame that suggest that we are going in a direction, and I do have those things, to be fair. There's enough for me to say we are going up. And I don't have too much to make me think we could go up, we could go down in this particular area. But by the same token, it's still a bit high, and I don't like this bar. Don't like that bar there very much. And I don't like the fact that we have to come back so far to test a level in such a short period of time. I like the first 15 minutes of the day is great to trade if you haven't got too far to go, and it can go boom and straight up. But this has still got some work to do, really, to kind of get down to even the first test level. The gap is really the problem, but the first test level. Now, what that gap does mean, in my opinion, Lewis, is that when the gap on the upside up here is potentially filled, the gap down there, can I get rid of this? Yes, I can. This gap along here, let me just do this. Might not even look like a gap on the daily so much, but there is I suppose the gap is probably actually from the low there, but that gap there it won't take too much. It's questionable whether even that's there. This one's huge, isn't it? That gap between those 2 points there is big, so that does need filling. And there is another one up here as well, but it might be when these gaps kind of do get filled, then we come down. Then this does become a bit of an elephant in the room later on. So the market, can just start to trend to the upside. Maybe close some of these gaps. I don't know how it's going to close this 7,600 and then start to come down. Because overall, I'm bearish. My actual outlook is bearish for the FTSE, but not at this particular time. It just doesn't seem that there's any negative sentiment that is going to bring the market really down to probably this area here again. That's where we're looking to start with. Now, when I'm saying bearish, I'm still kind of looking at this probably a U-shape recovery. I don't think it's going to be necessarily up, down, and crashing to the downside. It might be, but we probably need some further developments for that to happen. But I am bearish. My outlook for the FTSE does need to come back a little bit. But I remember a few weeks ago we were talking about the rising wedge, and that rising wedge hasn't really worked out, has it? That's the upper level there. We were looking at this level here, and we're kind of flirting still with the pattern of the rising wedge just along here. We haven't really broken through and back into its body just yet. So you could say that this is a potential area to look for the short, but on the short-term timeframes, it's still suggesting that we've got some further upside, and that's why I'm wondering actually whether we might well get now to this point here, before we start to see some further resistance in the market. Shukri, sometimes when the setup on the FTSE is really good, I go to see the DAX, and if it is similar, I trade the DAX because it moves more, but the FTSE is safer. Oh, mate, no, I think that's great. I think that's a really good idea. Why, and then that's the whole thing about trading, isn't it? You kind of find what speaks to you, and if the DAX speaks to you off a barometer of the FTSE 100, then I completely concur with it. I actually really like that. I think that's a really sensible way to trade, because you're trying to find something with more volatility, so you can actually get some movement, and that's what you want, isn't it? If you like the setup, so you're getting clearer on the direction, but you need volatility for you to get a decent trade. So you go to a different market. I think that's fantastic. It's a bit like trading the pound yen over the euro pound. The pound yen's great because there is volatility and it will move and you will make money faster. So good on you for that.
It kind of goes to what we were talking about last night as well in the US session about. It's one thing to just follow indicators and take trades when an indicator tells you to take a trade, and it's entirely another to think outside of that parameter or that paradigm, in fact, and think about what the market's doing, think about what correlation means, and think about how one thing affects another. I think it's awesome too. Good on you.
Yes. Yeah. I mean, that's really cool. Okay, mate. Well, we're just about at the 8:30
half hour.
The half hour. So yeah, should we,
that covers most bases.
That covers most bases. Yeah, let's have a look at that. So the market is now drifting again to the downside. So I will holler if there is something that we can do here.
Holler for a Marshall. Is there a Marshall in the UK?
I thought you meant Paw Patrol. There is a Marshall in Paw Patrol. A Marshall in the UK. What sort of Marshall?
Battery.
A what?
A battery.
Battery.
It's a brand of battery.
Oh gosh, no.
Holler for a Marshall.
No, I see. Is it an advert? Is it? No,
Yeah,
we have Duracell.
Oh, the bunny. You got the bunny. Oh,
bunny.
That's Eveready. Yeah.
Eveready. Oh yeah. Eveready. But I would no Marshall. Never seen Marshall. But there is a Marshall in Paw Patrol. Check him out. He's quite cool.
I want to be the marshal on just Judge Judy. Bert.
Oh yeah.
Bert.
Bert's
got the coolest job, man. He's just the
man. Yeah. I'd kind of like Bert. I think he'd be quite cool. Just have Bert around, I think would be quite good.
Pretty laconic, isn't he?
Oh, he's amazing. Yeah. I don't think anybody would. I think he makes that job look cool. He's just a dude, isn't he?
He is a dude. I agree. Absolutely. Would all those in the case of euro versus US dollar please step forward? That's Bert. Okay. Speaking of Bert, let's have a look at euro US dollar. That's the 30-minute chart, which screams of an inverted head and shoulders, really, doesn't it? But gee, they're flat as a tack. And I don't know that I'm too interested in that, but it's gone anyway. This is a multi-story, perhaps, where we're seeing the dollar sell off, and we're seeing the pound rally, certainly, but we're seeing everything pretty much against the pound rally. The interesting one is dollar yen, which isn't crashing. Weird that pair. That really is a weird pair. You can see the Aussie taking off, and somebody's going to hate me from yesterday. We were talking about this bar here, the low test bar on the weekly pivot. And I said, yep, it's there, absolutely there, but I wouldn't be trading it today because it's public bank holiday in both UK and the US. And I think that was wise counsel, to be fair. But at the end of the day, who was right? Look at that. Bang, away you go. What's causing it? Absolutely no idea, except I suppose that they have come out of a holiday, and this is the UK traders I'm talking about. And they've got an opinion, and that opinion is that the dollar is weak. Well, about time. Where have they been? Yeah, Lewis, same as me, mate. The dollar yen should be crashing like no tomorrow if there's a weak dollar in play. But yeah, it's crazy, isn't it? Really, really crazy. So what do? We wait till the dollar rallies for dollar yen to sell off. Is that what we do? I'm not sure, mate, to be fair. But I am still bearish across. So any sign of this turning around, and I'll be jumping on it very, very quickly. That order on the weekly chart, we did cancel that, I'm pretty sure. I'm out of all of my positions except on the TTR account, because I've changed from, what's it called, IFS to Fusion, my personal account. So from this day forward, from this day, sorry, backwards to Friday, I have no positions in the market personally. Still got two in the TTR accounts, and they are pound CAD, still short that, and Kiwi dollar, still short that. Well, at least I was 5 minutes ago. That may well have changed. What's happening? How do we get a trade? Well, things have changed dramatically in the last, couple of hours, I suppose. And that kind of gets me in a good mood, because what I was seeing before is probably going to offer me far better prices than I would have got otherwise. Euro dollar, placed an order on euro dollar this morning, and that's got to go now. What was it? Was trading this bar here. This bar here short. And you can well and truly cancel that order now. That's done. Anybody who was in my show this morning, you can cancel that order. That's no longer valid. What we...
tell you what, mate.
What?
We were talking... Sorry. We were talking about stocks, weren't we, in the US show last week?
Yeah.
I remember we were talking about stocks, and I can't remember who it was. Was it Alan? Was asking about UK stocks. The stock we were talking about, EasyJet. It's up 11% today. I think this is the thing about these stocks is that they're so low here. You know, we could get, if this economy starts opening up, some of these stocks to kind of like start picking up might end up kind of creating a proper reversal pattern. But some of those beaten up stocks, Carnival up 11%, EasyJet up 11%, Intercontinental Hotels 12%, sorry, 15%, and International Consolidated Airlines Group 16%. So the travel stocks, Rolls-Royce up at 12%. The travel stocks and the ones that have been really harmed by this, you have a look at, you know, when there's a market rally, these things are going to go. And that's not to say that they won't turn around again at some point, because I think the FTSE will generally, you know, probably come lower at some point. But these stocks are just going to get some serious movement.
Yeah, someone's obviously of the opinion that we have seen the worst, and they've tried to pick the bottom.
Yeah, yeah.
Well, whether they're right is yet to be seen. But look, in all fairness, we're still on the teeter-totter, and at the moment the totter is, or the teeter really, or is it the totter? Could be wrong. Is suggesting that we have seen the worst, and the totter, if that was the teeter, is that we still are yet to see whether these release of restrictions are going to be good, bad, or well, they won't be indifferent. They'll either be fantastic and we won't see massive spikes and second waves and all the rest of it, or they'll be dire where we will see those. And if that's the case, then there'll be a very quick turnaround in what we've just seen and what we're seeing today, frankly, where traders are stepping in and saying, right, everyone's going back to work, let's take a punt. And that's pretty much what I'm seeing anyway.
Yeah, I think you're right.
Whether, as I say, if they're right, then they're in at a very, very nice place, and they'll get a very, very nice ride if this second wave doesn't come. I've got no idea. You're asking the wrong person here, frankly. It is a gamble for me, and I'm just waiting to see something in the charts that suits me. And at the moment, that is pretty much, well, it is the case, because, you know, if I'm trying to get short here, then the best thing I can possibly do is get a price that is, pardon me, 50 or 100 pips better than where I was going to enter in the first place. So I'll still be looking for a lower high here on Euro US dollar. And if that comes, then I will be looking to get into that short. I'd want to know that this move against the dollar is has got good reasoning behind it, apart from what we've just discussed, to be convinced that euro dollar is going to rally its socks off anytime soon. If I look at the bigger picture, we have been in this consolidation area here for what now? That's a weekly chart, 2, 4, 6, 8. Let's call it 10 weeks, so the best part of 2.5 months. Why will that change? Well, it's only going to change if the news changes or the fundamentals change. And that's exactly what we've just been talking about. So, you know, I think until it's proven or disproven that we are doing the wrong thing by releasing these restrictions or relaxing these restrictions, then you may see a rally. But until that's clear, I won't be part of that, I don't think. We'll see. If
it will unfold.
It will, yeah. Time will tell. And we'll see some very sharp movements when there is proof either way. There's no doubt about that. But in the meantime, I think consolidation is still the game I want to play. And of course, that means ranges, and ranges means trades. So lower high is what I'm looking for here. We're already at DR2 on Euro US dollar. We do have a tested daily pivot, I think, at this point. Yeah, not really. And the pivots are very close together, so that's going to tend to be a little bit of a magnet to price as well. So despite the fact that I can see on the smaller time frames that inverted head and shoulders, which, as I say, is very flat, I'm not yet convinced that I'm a bull. In fact, I'm not yet a bull. We'll put it that way. Try and work dollar yen out as we've spoken about. As I said, that order has now cancelled. So let's get rid of that. Still at the top of the range and headed towards the top of the ascending channel. So probably no guesses for, or no points for guessing what I'm looking for. I'm looking for a bounce off the top there, get back inside the range, maybe underneath the pivots, and then retest them from below, put in a lower high. Happy days. I'll be a dollar yen bear once again. Is that possible? Is it possible that we could miss that? Well, if I look at that chart, I'm thinking, lower high, come back inside the range. A little bit of a double hit on the 107.30-ish mark there. Then we put in another lower high based on this. This is a bit tricky, isn't it? If I go to the daily chart, once again, it's not clear. It's really not clear. In fact, the 4-hour chart looks more interesting than the daily. That candle's, quite interesting for me, but trading into this conglomeration of pivots here. Yeah, I don't know. Let me have a look. So risk is 20 pips. Reward is 5 to the daily, 9 to the monthly, 13 to the weekly. Is that really going to go through there like a knife through hot butter? I'm not so sure. I think I'll leave it. I'll leave it and wait till this this area gets cleared, then comes back and gives me a lower high off resistance. Stronger resistance, sorry, this is still resistance. Yeah, I'll wait on it. I'll wait on it to see how we go. Now, the Aussie, again, going back to this little candle that was seen last night in the US session and spoken about, and I said, no, it's not for me, because I was actually looking the other way, to be fair, but and it's quite clear that we are in a bullish trend. There's no question there. But for me, it wasn't a trade because of the situation. Bank holidays in both places. The market was never going to do anything, and it didn't. And of course, today it's taken off. Had you got in, you'd be happy chappy right now. And I hope that that person did do exactly that and is now enjoying the benefit of it. Alan, I'll get to that question in a sec, mate. I'll go back to it. So what do I do with Aussie dollar? Well, nothing changes for me, really. If I've got a range, I'm looking for it to come back inside that range. And if it does, I'll look for a short trade. Am I considering long at all? Well, on the basis of what I've just spoken about, I was always considering a long, because we're in this long for quite some time and got out of it expecting a monthly pivot test, which just hasn't come. From the beginning of the month right through it, I was expecting this to come down and give us a monthly pivot test, and I'm still waiting for that to happen. Alack and alas, that doesn't certainly seem the case at the moment. And of course, my overall target, which was 66.75, actually, this has slipped a little bit below that for some reason, looks to be pretty much in play there right now, I would have thought. So I think I'm in a no trade zone on the Aussie US dollar at the moment. If it gets back in here, I'll change that, but I think I'm just going to have to let it go to target, or what should have been target, if I can put it that way, and then wait and see what happens there. Pound on that, well, really, we've had a two-stage rally throughout the day. That's the 4-hour chart that we're looking at, and similar to the Aussie that we've just looked at. We saw nothing yesterday, no surprise there, and pretty much off the starter's gun this morning, we've gone bang, pause through Asia, bang, pause towards the beginning of UK session, and again, we've gone to sleep. Try and work it out. I really can't say to you that I'm confident this can rally further, nor am I confident that that it's going to crash either. So I'll rely on what technicals I have available to me, and they will be, in the first instance, trend lines. There's one there, and there's probably one just above it as well. Say there, and off either one of those, if I were to see a false break set up, then I think I'd be more inclined to trade it short than I would long. I really don't know what, if any, story there is about the US dollar, apart from the fact that traders are back at work this morning, and but potentially in Britain, Aussie has relaxed restrictions as well. Kiwi, I'm not so sure about, but I think they have in the US as well. But I've got a funny feeling that everybody who's saying that the US are releasing their restrictions are doing it at the wrong time, because it's still rampant over there. And now Brazil's just horrible. So yeah, that part of the world isn't very, very nice. Fair income. So I don't know about the US relaxing their restrictions. I think that's probably a bad move. Anyway, not for me to say. So pound, no, I don't want to go long. So I'll look for it to come back underneath either of those trade lines and go short. Dollar CAD is one that is selling off. Not sure what oil's doing. Let's have a look. Yeah, at its high as well. At its most recent highs. If it got through there, then maybe that can continue to rally. And if that were the case, then you would see dollar CAD continue to sink, one would think. Interestingly, getting near the bottom of the range. And when that happens, of course, there's only one thing we're looking for, and that's either a break or a bounce. And if it is a bounce, we'd be looking for a higher low. That, of course, is the daily chart, but it can happen on any chart. It doesn't have to be the daily. This is squeezing out into the end of the toothpaste tube, and something will give at some stage. But in the meantime, you're getting consistently lower highs and higher lows. Very, very tough to call. This is dollar Swissy, so I won't even try. And the Kiwi, there's our stop loss on the weekly chart. Those of you who weren't in that 3 or 4 weeks ago, we traded this bar here. We've only taken our first profit on this, so we're still at risk, and that risk appears to be very high at the moment. Not that it's a big risk that we've taken, and it still only be a very, very small loss if it does get hit. But we're at the top of that channel, sorry, that rectangle, and if that once again acts as resistance, then there may well be another opportunity to trade it short. We did trade it short again on Thursday on an hourly chart, and I'm assuming that all of you guys are out of that by now. I got out of that on Friday with a very small win, which was a TP1 reduction 55%, and then it hit my trailing stop. So, you know, not even a beer in that, but a small win nonetheless. That does not look healthy in terms of, although our stop's in the right place, I'd have to say that. And if we can find this resistance level, act as resistance once again, then we may well get out of this yet for a win, but we will see. But mate, nothing really to excite me, I've got to say, on the majors at this point in time. And really, I'm just waiting for those rallies to desist and give me probably what I'm looking for, which is in most cases lower highs at the moment.
Well, the FTSE continues to drift a little bit in this area, so there's still nothing to do. Interesting as well, because we have a potential negative looking 4-hour bar if we are to close, with this kind of shape in the next 10 minutes. But I'm still interested in this long. I think it might well be one of those positions that you could, for a bit of extra safety, take a long above the close of the 4-hour bar. But I still can't justify. It's still not quite where I want it to be. So I'm hanging on at this stage, but. I'm a bit concerned about missing out on the trade, but by the same token, I can't. It's not on my price. It's not on my price. It's I might be after too much. I might be after too much of a drift down, but I've got my mindset and it's firm, and it tends to be a better way to think. If you've got sort of something that you've got a fairly clear view on, and I have. It's not. I can't really bend on this one at this particular stage. Maybe 10 pips away I could justify, but it's a whole 20 pips away from where I want to enter, and that's just a bit too high. That's almost 0.5% move on the FTSE 100, currently sitting at 6,000. So I can't. I can't get in just yet, mate. I'm still waiting. But it is, yeah, it's coming back. I mean, I've just seen a little pop back up again, and it might be that we've just found the area it's going to hold. But I am sat on the sidelines. I'm a little bit with you. It's got to be one of those things that it's got to line up. And if it doesn't quite line up, then I'm not lined up with it. And it is the gap. The gap is the big problem. I can justify taking it at the top of the gap. I can't justify taking it in a kind of a middle zone, and the lower gap, could run me over. And just to quickly take the screen here, the issue is, thank you, mate. The issue is the stops. If I'm sort of like, if I'm trying to trade this, and I'm thinking that, if I get in here, then the issue is the stops, because my stop will be a kind of, there'll be an insurance stop, if you like, down at the gap. So there'll be this area here becomes like an insurance zone. Down here becomes a bit of an insurance zone. If it comes too far down, I won't allow it to hit my stop. But this kind of zone here is where really I'd like to see if I can get in, because at least if it does start to break down, then I've got a lot of room to be able to take off my stop. I can take off the trade. But if I get in here, I've got it's almost the same again to kind of come down to the line where I would be most keen to enter. So it's got to be at least another, well, 6,100, fine. I could justify 6,100 potentially if I see a reversal pattern, but I can't justify where it is. So I'm still waiting, mate. But it is drifting. It's just drifting a little bit towards where I want to be. So I'm hoping that we get an opportunity, but it's just not there yet. And it might be, we might maybe we meander sideways for a while. Who knows? But not quite the market I was expecting after a bank holiday. The gap up, this gap that's been going on up here, was really off the Asian session, and this is what's been going on during the UK session. So the UK session has been drifting down so far. So I'm just waiting for a turnaround in the UK session, but seeing a turnaround here, no good. Seeing a turnaround here, fine, and maybe even somewhere in between the two, I could justify. But right now I'm just on waiting mode. But I have to say that the opportunity looks like it's there. It looks like we will get a trade on today. But I haven't got it just yet. Interesting as well. Just Eat. We just somebody mentioned Just Eat. Where is it? Volatility. Oh, Just Eat takeaway also at highs. Yeah, but actually, Shukri, we'll talk about Just Eat in the US show later on, because I'm seeing a potential for a short to come into play. And, we did discuss why Just Eat is a potential short. Same with Ocado. So I'm still looking at the Ocado and Just Eat story for a potential short. And as I say, we'll analyze that a bit more in the US show. And see what we're looking at and what we might need to see with that one to potentially take a short. I still think there's a pretty good chance that both those two stocks could weaken a little bit if we start to come out of lockdown. Ooh, the market's coming down. Here we come. Here we go. Now, what's interesting here is if we look at this on a 4-hour chart here. Look at this 4-hour. Look at this 4-hour bar. Do we really want to be trading this particular bar to the upside? It's not the it's not the best, is it? But but by the same token, there's times where these bars end up being actually bullish, and I know that if you were looking at this bar, you'd be quite keen up at this level, wouldn't you, mate? I'm not sure whether the price is good for you up here, but a bar like that would interest you if it breaks the highs. Am I right in saying that?
Yep. Yeah, sure.
Yeah,
absolutely.
So that's one way.
It depends on where it is, though. If there's DR2 around the place, then no.
Yeah, there is a bit of DR2 up there, actually. Yeah, there is a bit of sniff of DR2 up there, mate.
Then no, not for me.
So okay, so the way I was going to say we could trade this if we miss this picking it up somewhere in this area, then it might well be the DR2, but sorry, the high of the bar. Yeah, as Jeff says, it might still be a little bit dangerous, but let's see what happens.
I mean, that said, Ash, I've never done the exercise on the FTSE whether DR2 is even relevant. It may not be relevant on the FTSE, and that exercise I do with putting DRs 1 and 2 around price. It may not be relevant. So I really can't make that comment without doing the exercise.
Yes. Yeah.
Because what's relevant on euro-dollar may be nothing or even close to relevant on the FTSE.
Yeah, it's interesting actually, mate, because as time's gone on, I've paid a lot more attention to the pivots, since we've been sort of trading together, and DR1, DR2 is still a blind spot for me. I don't really look at them with any kind of relevance when it comes down to the FTSE, and I don't know whether that's because they're not important,
well, let's do the exercise in the US session. We'll do the exercise and put them on the chart.
Yeah, cool. Okay, all right, that sounds good. Okay, well, it's looking interesting. This looks like an interesting session. Now, I have to say, this 4-hour bar. Now, you guys have always got to make your own decision on this stuff. The 4-hour bar will not be putting me off. I will look at that 4-hour bar as an opportunity. I'll still look at that 4-hour bar as an opportunity for a long. So I am, because we're going to be, obviously moving on fairly soon. The show is going to be closed down. So if I see a setup in this area, and I see, and basically a setup is, do I see evidence that it's holding somewhere along this area? And if I see a setup that this is this holding along somewhere along this area, then I will be going long. So don't be surprised later on in the US show. To hear that I took a long in this area. Now, it might be that you hear me say that I took a long and then I had to take it off again. But don't be surprised to hear me say that I took a long somewhere around here, because that's what I'm after. That's what I'm looking for. And this 4-hour bar, as much as it is an engulfing bar, and normally I would give it quite heavy credence, I won't be doing that today. You're going to have to make your own judgment call on whether you're happy trading into a 4-hour engulfing bar. And if you're not, then stay out. And it might even be that you end up being right. So yeah, sorry, I was just seeing if it would come down a little bit more. We got about a minute and 10 seconds to the top of the hour, mate, and that will be the 4-hour close on the futures. So I don't think the 4-hour bar will close on the futures, and it will look pretty ugly. It has to be said. It looks slightly different to this. It looks like a high test or a shooting star up there. So the 4-hour bar is going to look pretty ugly on the futures. This one won't close, I don't think, for another hour. But just know that the futures bar looks pretty similar to this 4-hour bar right here. So yeah, make your own judgment call on that. I mean, well, the other thing is actually that regardless of the 4-hour bar, what you will have on this chart is a 1-hour bar, and the 1-hour bar is an evening star pattern. So, and it's a pretty strong one. This is an evening star, and it would have taken out quite a lot, actually. It's going to have taken out 4 bars of price. So it's pretty strong. That is a strong signal for downside. When you think there's bar, all these four bars here. I might not be able to do this properly. There's 1 bar there, 2 there, 3 there, 4 there. And this is just taking out all of those. So that's a pretty strong signal for some downside. So be very careful when you make your choice here, if you like it or not. You know, make your own choice on it. As I say, don't be surprised to find out that I'll be trading this long, but it doesn't mean that you should do the same if you don't like the way the picture is unfolding. I'm just giving you the ideas that I have. Okay, mate, still nothing to do. It's still not at the price I want, and particularly not at the price I want with a bar like that. So I won't be doing anything. I won't be doing anything in the next 5 minutes at least.
Okie dokie. A few questions there to answer. Helen, sorry I didn't see that one before, about broadcasting the charts that we're on in terms of time frames. I will concentrate my hardest on that and try to make it absolutely clear what chart that we're on, or what chart we are on. Now, another question was dollar yen. That's a good question. I really like the question. And it is from Alan. Yes, Alan. So Alan's got a dollar yen short order in the market, and he's asking me if I don't know what time frame you're on, Alan, and it doesn't really matter. But what he's saying to me is the order that he's got in the market. Let's say he's trading this bar here. Let's say he's trading this bar here, for instance, and the market has no entry, right? So the market's gone beyond his stop loss, wherever that may have been. And he's asking me, should he cancel the order? Very much a case of what is happening around it, I think. And I know that there are a lot of traders in ATW that would, as soon as they goes through the stop, they cancel the order. And I think it's perfectly sane way to think. Absolutely. And the reason for that is if the price is willing to go there once, then chances are it's willing to go there again. That's exactly how price works. So I've got no qualms if you were to do that. But sometimes, just sometimes, that movement can be very, very swift. It can be an emotive reaction to news. It can be the traders going back to work on a Tuesday morning after a 3-day break, and it may not necessarily be, the death knell to that trade that you think it is. So it's not a one size fits all for mine. But, by and large, I think if the market has taken time to do that and go through that stop loss before your entry, then it's probably going to give you another opportunity to get short, or it's going to go in the opposite direction. So, for instance, if that were the bar that you were trading as a lower high, maybe yesterday morning, then maybe this one here is the same in a different price area, or above DR2. I don't mind the candle myself, to be fair, and I spoke about it a little bit earlier. But
we're still on my screen, buddy.
Oh, that makes for a huge imagination from you guys. So I will. I'll just very, very quickly repeat what I've said in Pray C. And here's the chart that I was talking about. So the verbal is exactly still the same. It may have been, let's say you were trading this bar here short and your entry was here, obviously no entry, but price has gone through your stop loss. If the context is still there, then maybe you leave the trade on. And as I said before, this may well have been just the traders coming back to work, and they got excited and pressed a few buttons that maybe they didn't really think too much about. I don't know. So you can get emotive moves that go through your stops rather than considered or precise and technically correct, if you like. I'll put it that way. Moves. So it's not a one size fits all, as I said before, but you're never going to go wrong. You're never going to lose money by doing that. what may happen is you may get a second setup that looks exactly the same, but at a better price. Maybe that's the case. I like that bar. As I said before, the reason I don't want to trade it is because we've got very strong pivots sitting below us. That's a massive level right there. And it has been resistance before, as you can see, and support through here as well. So I want to see that level break and be retested. So give me this bar here, having gone through the pivots, and then I'd be on it like a shark on a mackerel, no question. But there is no definitive answer from me to your question, because sometimes it ain't that bad that you go through the stop loss, but often it is. I'll put it that way. And the other question that I wanted to tackle was Aussie Swiss. Aussie Swiss took 2 trades, 1 hour Aussie straight up and down. Let's have a look at Aussie Swiss. Okay, very, very briefly. I'll put it on this chart rather than go to my other one. Aussie Swiss.
Yeah, Manuel traded the Aussie dollar a couple of weeks ago as well, and that's started to work out really well. So that's that's kind of evidence of the importance of staying with a trade as well. Just letting it develop, especially on a daily chart.
Yep. As I say, it's not one size fits all, and I get the theory behind it, but not always the case. So Aussie Swiss, massive range that we've come out of. Where's my rectangles? Here. So this range probably began, let's say there, a couple of equal highs, a couple of equal lows. So there effectively is your range, and you've just broken through it. Now we talk about this many times, and this is either going to be a genuine breakout or it's going to be a false breakout. Now, most breakouts, if you haven't discovered this by now, are false breakouts. And the way we measure them is pretty much, I can't go into how we measure them. It's rather complex. But this is going to be wrong. This breakout should be wrong if price gets back underneath the bar that broke out. So you could quite conceivably place an order underneath that bar and your stop loss above it. I don't think there is a level. Well, there is a level, and there it is. So if you've got your stop loss up here somewhere at, let's say, 64.06, and you put your entry underneath that 1 hour bar, which would be at around about 63.80, say, you've got a risk of 26 pips. Your reward potential here is about double that. So you've probably got a 2-to-1 position if you were to play that as a false break. Now, my old way of trading that is to wait for price to come back in here, then give me a lower high. So I'd be waiting for at least 5 candles. This is the 1 candle way to trade that false break if you're interested. Am I interested? Let me ask myself a question. I'm not disinterested, I've got to say. And I think that's a reasonable position to take. Should we do it, guys? Why not? Why not? Hourly chart. Is that what you guys were seeing, or you're wanting to trade the breakout? I'm not sure what you were trying to, or what you were seeing, but that's what I see. So just 0.25%. We don't need to overload ourselves here. It's a pending order. It's a sell stop. And the levels I gave were probably nothing like the level I'm just about to give you. 63.80 would be the entry. 0.6380 and the stop loss. I did mark it. What a clever chap I am. 64.06. So 0.6406. There's your entry. There's your stop loss, rather. And bingo. Just like that, we have an order underneath this bar. We're trading a false break of the top of the range. at a reasonably strong resistance area. It might just sneak up a little bit higher, and if that's the case, we shouldn't be taken into this because it should just keep going. But I do like this, not too bad. Counter momentum and counter trend, but that's okay. So are most false breaks. See how we go, guys, and we'll have a look at that again tomorrow, obviously here. And what about the Aussie CAD breakout, says Shukri. Okay, Aussie CAD probably looks very similar, I would imagine. Let's put that on here. Go there, not there, go away. Aussie CAD. You guys are doing a lot of work for me. I like that. I don't have to look at the charts. You guys are looking at them for me. Perfect. That's not what I wanted to do. That's what I wanted to do. Okay, so chart is the no chart given. Okay, breakout of what? Let's go in here and have a look. 4-hour chart. Not really seeing anything in terms of a structure. Let's go a little bit thinner. Yeah, I suppose. Where's the high? There. So that's your breakout, I guess. Challenging a double top, yeah, I get that. I wouldn't be as keen as I am on Aussie Swissy because I think Aussie Swissy is a lot cleaner, and I think the range is a lot cleaner on Aussie Swissy as well. But it's the same. It would be one and the same. I think the trade's going to be, exactly the same trade, I would imagine. I just prefer the Aussie Swiss because it's a little bit cleaner than this one is. But yep, you could absolutely put your entry underneath there. You see the bar's not as strong either. And I know I'm on an hourly chart here. Maybe a 30-minute chart looks a bit better. I don't know. Let me have a look at that. Yeah, which one are you going to trade? This one didn't quite break out. That one did. Again, it's not it hasn't closed on its high. It's not as decisive. And the reason we like to see it close on its high or thereabouts is because that is the strongest signal to a buyer that we're going long when we close on the high like that, right? So you can see that the buyers have just jumped into that as well. But they've soon stopped when they got to this high. It's interesting. And what happens next will be interesting and will determine, in my humble opinion, where this goes today. Because if this is a follow through, then this is just going to go and go and go. But if it's not, then probably that candle is then tradable. But it's not as decisive as I would like to see it. When it closes on its high, it really is a strong signal to the buyers that we're going that way. And if they're wrong, then they're going to be wrong big time, and they're going to be wrong under here, as I said before. So not as good, in my humble opinion. Please confirm Aussie Swissy level. Sure. So the sell order is at 63.80. So we're selling at 63.80, and our stop loss is at 64.06. So 63.80 and 64.06. Okay. Right, mate. I think I'm done. Thank you guys for pointing those out. And as I say, we'll see how they go. I'll be checking on them in the US session, of course. But those of you who are not in the US session, we'll have a good look at that tomorrow and see how it went. How you doing, Ash?
Yeah, I mean, there's really nothing to do. It's price isn't any good. It's kind of floating around. It's suggesting that we may well have found the support line, but Just to kind of reiterate, it's just a little bit too high for me here. Just a bit too expensive, and the initial excitement that I had this morning that we were going to get straight in has abated. So I won't be doing anything
real fast, didn't it?
Yeah, it did. It did. And I guess it's maybe this is just indicative of what happens or what can happen after a long holiday in two separate markets. You know, there was certainly some buying into that particular event, and the Asian stocks also rallied overnight, and the FTSE's just drifted to the downside. As I say, it is putting in a potential hold here, but it's just not where I want it to be. So I'm not going to trade it. I'm gonna leave it. My suspicion is if we do kind of go higher here, there may well be another opportunity. You know, maybe it'll be a better opportunity. I don't know, but this one's just no good for me. Does look like there's some pickup, but not for me, mate. Not right now. I'll be waiting this one out a little bit longer and seeing if I can get the price I want. Maybe it'll come in the US session. Maybe it's gone. Maybe it's gone. Maybe there's no opportunity anymore. Maybe it's just one of those things that I'm gonna be. Yeah, I'm gonna be at least 20 pips away from where I want to be.
The good thing, mate, as I always say, is trading is not compulsory.
No, and you know what? This is the thing about it, is that I do want to go long. I'm really keen on the long. And if there was other things that suggested that I'd found the level here, then I'd be fine with it. But there aren't. You know, when I say other things, I'm talking about maybe pivots. You know, if there was a pivot where we were, I've picked my trend line out, and if the trend line is below where the pivots are, and I could justify the area of the bounce, then I would take it. But I can't. All I've got really, the area of the bounce is on a 15-minute time frame, and considering the move that we're trying to get here, 15 minutes is just not long enough. So I do need it just a little bit lower.
Yep. Cool. Got it. Righto. We'll do it again tomorrow. But of course, we'll be back for the US session in about 4 hours and 42.5 minutes.
Certainly will.
If you can join us, guys, be here then. If not, Ash,
we will see you tomorrow at 5 to 8.
That's a date. Don't be late.